I think there are two things in the UK that we need to keep in mind, which are making it diverge from the rest of the major economies in the world. Firstly, the inflation rates here are much higher than we are seeing in any of the G7 nations, right? Secondly, we are still dealing with the impact of Brexit and what that means for the UK economy. We are still dealing with public sector wage hikes, which, by the way, you look at the papers every day. Junior doctors are going on strike at the NHS. You know, the train line conductors are going on strike. The bus folks are going on strike. When those wage rises come in through, because the UK is also dealing with an election next year, the Conservatives are trailing behind Labour, how do you ensure that you get the popular support for the elections while also keeping inflation at a level that the government wants? Rishi Sunak had said he wanted to halve inflation. Today, Andrew Bailey spoke about it being at 2%, and you're just looking at that and thinking, when do you think it's going to come to 2%?
And like, how fast does it get there? Liz, I have to say, though, some of the issues that Ruth is talking about can also be applied to the U.S. Like, we have immigration and labor problems, too. We have unions as well and a lot of strikes as well. How similar? I mean, answer the question. I mean, could we wind up seeing what's happening in UK inflation here in the U.S.?
Yeah, and like Ruth said, there are some idiosyncratic differences, but there are similar things, like you're saying, Alex. Plus, you know, Chairman Powell is really focused on what he calls supercore, you know, services inflation. And so that sticky services is a problem in the U.S. as well. And I think, you know, we've had a lot of caution from some Fed officials this week saying there might be more to be done. But I think at the least, even if it's, you know, we're not comparing apples to apples here with the U.K., it's a reminder. It's a reminder for the Fed that, you know, things can take a lot of time, even if things are different in the U.S., and for traders, like, oh, we better kind of keep some optionality that there could be another hike coming.
Liz, is there also the issue, and this conversation is beginning to come up in the UK, about a wage price spiral? That the longer inflation lasts and stays elevated, the more wages are going to respond to it, and that starts to become a cycle which is harder to break for central banks like the Bank of England and the Fed.
Well, I kind of listened to Andrew Bailey, and I think I agree that it's not a spiral taking off, but I would say that few people are going to be willing to kind of say, okay, I can have a pay cut, right? Or they're going to say, oh, I'm making so much money that I don't need a raise. So I think at the margin, wages will stay sticky. And there might be some, like you're saying, Guy, that say, I still can't afford my groceries and we'll be pushing for another raise. So even if it's not a kind of official, like the economic folks say, a wage price kind of spiral really taking off, I think wages are going to be slow to come down. And that's a problem, right? Yeah. You know, even if they don't go up, slow to come down is not good for the Fed.
So, Guy, interestingly, TD Securities had a note out just about an hour ago talking about they'd look at 2 more hikes now from the BOE, and maybe even more if inflation just won't come down. And you have to wonder, like, if we're putting 2 more cuts back on the table, are we really looking at Fed cuts still?
Yeah, two hikes. I think it's a really big kind of issue that we need to deal with. And the issue is the longer it goes on for, the longer it becomes harder to deal with. The interesting thing, I'm going to kind of reverse it a little bit, Alex. The interesting thing that I think comes out of the States right now is you look at what's happening with the debt ceiling and the potential for fiscal cuts, or at least a fiscal a sort of standstill, that could have a meaningful impact on inflation. So Ruth, is this something the UK is going to have to consider as well? There's more fiscal drag maybe coming through here in the UK. We're going to be speaking to the Treasury in a few minutes' time. Does the fiscal side here in the UK need to do more? Do we need to look to the United States and think, well, they're slowing down spending, maybe we actually need to do the same here? I hear what you're saying about the election, but inflation needs to come down. The Prime Minister has promised it will halve.
Absolutely. I think that is a very tricky balancing act that they're playing. Also, mortgage rates, right? I mean, we don't have, like in the US, 20-year, 30-year mortgages. You have the 2-year benchmark mortgages. We have 500,000 people that are now coming into the mortgage market to refinance. If you're talking about the Bank of England raising rates to 5.5%, there's a lot of pain coming through in the economy. And then that again goes back to the election point, right? I mean, you have a government that's coming to win an election and is dealing with all of these problems, and it doesn't seem like there's any easy solutions. But the thing that all of our strategists we're speaking to are concluding today is inflation is here to stay, it's going to be really volatile, and it's very sticky.